The crypto market has gone deep red. There have been losses across the board, but always understand, where there's a market, there is opportunity. At times like this, if you've been doing your daily three-dimensional risk management, you will be fine. You'll know exactly what to do. The move caught many by surprise, of course, but the concept is, if you're seeking to raise your synchronization, that's how you get paid and how you protect yourself from losses as well. In this video, we're going to see the catalyst that caused the crypto sell-off. We're going to look more deeply into the system. We're going to seek to understand what the real agendas are here, and why what is being done is being done. We'll start by going through the Tier 1 charts. There's been some really interesting developments. We'll also look at Binance, BNB. Stay tuned, it's going to be really interesting. Inside the CTKS Method.org, which is a completely different site from where the masterclass is. This particular website deals with levels. The masterclass deals with knowledge. The two are very, very different from each other. If you go to 00 across to 4, accessing the indicators, fill out the form below. I'm very happy to say that everybody who has filled out the form as of about perhaps half an hour ago, is into every single Tier 1 indicator that there is. The S&P 500, the NASDAQ, the VIX, the DXY, Bitcoin, gold, USOIL, junk bonds, and the US10Y. How do you actually see what the update is? You go into 01 to see the S&P 500, 02 to see the NASDAQ, 03 to see the VIX, 04 DXY, 05 Bitcoin. You get the idea. There are new videos, 9 new videos underneath these particular sections from 01 to 09. A lot of people just are interested in one particular thing and they don't look at all the other 9. This is a huge, huge mistake. The Tier 1s are vital for your success, and I'm going to go through them in a little while, because there's something I need to show you in the charts. But please be aware, the same information is repeated in terms of adding the indicator in. If the indicator goes red for any reason, I cover off inside those videos what to do. And you will see those indicators being published through the CTKS Method service. Looking at Bitcoin is very important to observe. Right now, we don't know where the smart money buy and sell areas are because we haven't turned on the indicator. We can see that at this particular time, when the SEC decided to launch action on Bitcoin, launch action on Binance, I should say. But of course, Bitcoin is tied up with all of that. Just remember back to FTX, all the other things that happen in crypto. What we saw was Bitcoin sell down to a smart money level, a second one, try to recover back, just getting below, trying to install itself above this particular resistance. It's not got there yet. It's about 25,927 where the resistance is. Smart money was protecting the price from going lower. We can see that we're in a bit of a channel now. We've had a couple of cutovers. It could be either positive or negative for Bitcoin. It really depends on how people view this action. A lot of people will be buying the dip, so we may exceed that 25,925 level for a little while. But I think mainstream media hysteria will grow, and we could have another couple of days of red. Looking at the S&P 500, without the indicator on, we really wouldn't know where it was going at this particular stage. Where are the safety nets? Are there any safety nets below? The only way to tell is to turn on the indicator. We can see that the safety net around the 4269 area held very, very well. These are smart money buy zones. What they do in the event of a climactic sell down, they will support price for a time. If there's more negative price momentum, the next one down is where we would be looking for. Members of the monthly CTKS Method service get all of these indicators. It's just included in the monthly price of membership. One thing that we did see in yesterday's session, there was a big spike up in fear in the VIX. When we turn on the indicator, we understand that we were below a smart money sell area, but these particular lines have a gravitational pull, but we didn't get above them. We've resumed down. So this is something to keep in your mind. I'm highlighting 10 o'clock in every single chart for a reason. Look at the US 10-year yield. It absolutely dove. But where did it dive down to? Obviously that there was a smart money buy area there. This is exactly why we do this. You can see that there were two smart money sell areas and the 10-year yield didn't get above those. Remember, there's interdependencies between all of these charts. If you're looking at independent charts, you're not looking at it the right way. You must find the interdependencies between. That's why I highlighted this 10 o'clock time to help you to see it. But what happened then with the US 10-year yield? It dove down to these smart money buy areas. What do we call these? Safety nets. Why do we call them safety nets? Because they act like them. Price comes down and trampolines between them until it can get above. If it's too weak, it will resume below. This is the way that we look at price action on its terms, not our terms. When looking at the DXY, without the CTKS method, you don't know where the safety nets are. And if you don't know where the safety net is, you don't have one. Turning on the indicator, well, you can see where the safety nets are in the DXY. One around that 104.048, another one 104.006, but look at this rock solid one around the 103.849 mark. When the DXY plummeted through, we saw that it was trying to get held up by these two smart money buy levels. Because price was above, it found these two safety nets, but it became weaker. And we know the price travels SL to SL. When it becomes weak, it's going to the next one. But you can notice this particular smart money buy level around that 103.846 mark is particularly strong. What does this mean? We would expect a technical bounce, potentially up to the 104.004 level. Can you imagine trying to trade, for example, the DXY Forex, without knowing where your safety nets are? What did we see with gold as the DXY plummeted, as 10-year yield plummeted? What did gold do? It went the opposite direction, and that's what gold does, and we know that very, very well. If you're trading in gold and you're not looking at the DXY and the 10-year yield, wow, you're playing with fire, because you really need to know those things. This time we're looking for ceilings. Where is the ceiling in gold's price? I'd like to imagine that you're interested in gold at these levels. You know it's coming up to smart money support and it's starting to do cutovers, quite a few of them. The next area in play would be this 1954 area and then the 1961 area. You would know that even though you got such a fantastic candle up, that doesn't mean that gold is just going to go through the roof, because it did go through one at that 1954 level, but it had another roof as well up here at that 1961 level. And you can see price tried to get above. It's really having a tough time of it getting beyond that 1961 level. But if it does, where is the next smart money sell level? It's up here, 1973. Good year. But what happens if it doesn't get above? It's going below, back to the 1954 level. In crypto, there's a thing called PAXG that you can actually apply your gold indicator on. And what do we see here? PAXG is very suppressed in terms of price. It didn't really make it past that 1954 level. We can see that that was quite different. Actual gold made it above that 1961 level all the way up to 1964. When we look at PAXG, note this 1938 level. That 1938 level is right there. What can we say about PAXG? We can say that it has a lot more negative volatility than gold. It does represent gold and it gives you a ownership stake in gold. That is a physical ownership stake in gold. This is probably why it's negatively suppressed. It would be very good to look at PAXG when you're trading gold. When I look at those two charts, this is what I see. PAXG is doing this. Look at that negative bias on PAXG. To gain a physical ownership share in gold, there are lots of management fees. I can assume that this is what you're actually getting hit by. Also, crypto is inherently more volatile, so that's another thing as well. But I would suggest looking at both together. It could give you some really, really valuable insights. PAXG is more negatively biased, but it's very, very volatile, much more so than actual gold. If you're looking at the variability on USOIL, remember what happened to the DXY, what happened to gold, what happened to the US 10-year yield. That 10 o'clock was a very interesting area inside the market. But what is the objective dynamic market structure? And when it comes to the CTKS method, you can do all of this yourself by just going to the ctksmethod.org or across to the masterclass. Oil has had a bit of a bump in price after Saudi Arabia cuts oil output after OPEC members clash over quotas. When looking at oil's price history, we can see the Saudi cuts pushed the price of oil up, but it pushed it up to an SL, a Stanfield level, and these SLs are ceilings. It pushed it through one ceiling at 73.37, pushed it through another 74.63, but it couldn't hold it. It ended up falling down. One safety net, another safety net around that 72.44, and then it was merrily pinging away between until it became weaker. And this is where we find ourselves now. We're in all likelihood heading down to the 71.09 mark. We're losing a little bit of support here. We always have our three-dimensional risk management playing out at all times. Knowing the intercorrelation and interdependency between these tier 1 charts is the difference to making profits or losses inside financial markets. A lot of people would never look at junk bonds. They would say, Ken, it's just junk. I'm not interested in looking at junk bonds. It has no relevancy to me at all. Look at what junk bonds did. Junk bonds are like the VIX. They measure risk inside the market. Look at this. The risk was coming out of the market, and this was a really key level as well, around that 91.30 mark. And what did we do? We found structure inside the market at 91.08, but we couldn't get back above that 91.30 mark. What does this mean? We're stuck under a stressful situation in terms of risk on activity. If we get above that 91.33 mark, well, things are looking good inside the market, and it's actually shaping up to be on the cards that could happen, because we're noticing quite a few cutovers in price. Masterclass students, you know exactly what I'm talking about. Always remember, the market pays you for synchronization. If you can get more and more synchronized, that's fantastic. That's what it's all about. When we look at the NASDAQ at 10 o'clock, we can see that we had really, really strong resistance because price was below that. Tried to get above, but strong resistance does these things unless we can get above. But so many things happen. The 10-year, the US 10-year yield, the DXY, all sorts of things happening inside the market, which pulled it down. And we ended up revisiting this particular level around that 13,205 level. So you can imagine if you were here saying, wow, this thing could just go above, you wouldn't think at this point the safety net would be found below. But that's exactly what happens inside financial markets. This is why it's so important to know where the ceilings are and where the safety nets are. And the thicker, the better. Therefore, the question is, what desynchronized the crypto market? It's our old friend, the SEC. In news just out today, the SEC says that Binance misused customer funds. What is this alluding to? It's alluding to an FTX type situation. Don't forget, FTX and the SEC were quite close with each other, but Gary Gensler didn't spot anything. The headline goes on to say that Binance ran an illegal crypto exchange in the US. Regulators' lawsuit asked federal judge to freeze company assets. This has caused quite a stir in the markets, and the language that the SEC uses is FTX-like. It's designed to create fear, but why? We're going to look into that question and look into it pretty deeply. There's a lot of things that you need to know. Stay tuned, it's going to be very informative. The crypto market was hit hard when Bitcoin came down, and we know no alt can escape Bitcoin's gravity, so we expect all of the alts to come down with it. But some alts manage to temporarily escape at times like this. They're the ones we go hunting for, looking for. We can see Doge, it really sold down relative to Bitcoin. And this is what we find all the time. The alts will overextend Bitcoin's gravitational pull to the upside and to the downside, depending on what the market is doing. Something to note about the top 8 cryptos, BNB, Solana, Cardano, Matic. They're all being named in the SEC lawsuit against Binance. Expect volatility. Also, keep your eyes on the other ones, of course, File, Atom, Sand, Mana, Algo, Axie, and Coty. When the SEC launched their enforcement actions, look what happened to Binance's price. It absolutely tanked through quite a few smart money levels. This is an exogenous event, the things that I talk about all the time. When you get things like this, you must be aware that it will climactically sell down until it catches a lot of support inside the market. We've seen this particular market support around the 279 area starting to play out. But if price falls further, where could we be going to? Oh no, there's a lot of fresh air in Binance's price until we get down to around the 246 level. I just wanted to show you this because I think it's important that you understand where the smart money will be buying and selling. This is a tier 2 indicator, and I just want to mention a little bit about finding the tier 1s. The SEC filed a 136-page document to bring enforcement action on Binance. Please note, this is a civil action, not a criminal matter. All SEC enforcement actions are civil and they are not criminal. There's a lot to digest in that document, so what I thought I would do is ask the community some questions. For example, with the SEC action against Binance, how important is it for the SEC to prove that cryptos are securities? Their case relies on it, 100%. Another question, is the SEC seeking to attack individual crypto players such as Binance, XRP, Ripple, or all of crypto? The correct answer is all of crypto, and I'll explain why a little later on. Just something to note, in El Salvador, no crypto is a security. With the SEC case against Binance, can Binance afford to pay the legal fees to defend itself and tie up the SEC for years in litigation? Overwhelmingly, yes. Yes is 100%. There were some really good answers. If the SEC wins against Binance, how long would it take to reach a legally enforceable decision? Most people understand that it's going to take some time, and the majority say 3 years plus, and they are correct. Let's go back to that particular headline, and don't forget headlines are very much about sensationalism. Regulators' lawsuit asks federal judge to freeze company assets. A lot of people would think this happens immediately. It does not happen immediately. And the regulator's lawsuit asked the federal judge to freeze the company's assets. Notice the word, critical word, asks. That is a critical word. Let's get right down to where that particular thing comes from. On page 133, remember this is a 136-page document, and page 133, it's a prayer for relief. The SEC is doing a prayer. I would suggest that's quite right. Legal writing is very, very important to understand. What is actually occurring here? The SEC is saying, including but not limited to. relief that the court deems to be just and proper, including asset freezes. So you can see that the headline was not incorrect, but the potential to freeze assets just like overnight, for example, it's just not on the cards. That's why it's very important to understand what is actually going on and how long things will actually take, and it's going to take a while. Binance has very deep pockets. On social media platforms, it's really easy for people to just not understand what they're reading. As the SEC is bringing a civil case, it's all about fines, no jail time. The term fraud is used 17 times in the SEC filing, but the term fraud relates to something very specific. It relates to the fact that if the SEC cannot prove that the cryptos form securities, it has no case. The SEC on page 85 tries to get really specific. It says that Solana, ADA, Matic, Filecoin, Atom, Sand, Mana, Algo, Axie, and Koti are collectively securities. You can expect some real big price volatility in these particular things, and of course it's also including BNB and BUSD. These other projects have very deep pockets as well, so I don't think the SEC is going to have a favorable time dealing with them. The SEC must prove that Binance was trading in securities. If these particular cryptos can't be proven to be securities, the SEC's case goes in the rubbish bin. It's something to bear in mind. The SEC has said for a long time that everything in crypto is a security. Pay particular note of Algo. Jeremy Hogan, who's just a terrific guy, said, "I bought Algo because Chair Gensler praised it and its founders back in 2019. And now the SEC is alleging that Algo is an unlawful security. How could he wasn't the head of the SEC then, but how can the person that became the head of the SEC go so back blatantly on their own words? Isn't Gary Gensler doing a promotion of an unregistered security? Gary! There's no question that the SEC will be after Gary Gensler for these comments, just like it went after Kim Kardashian and so many others. Oh, but wait, no it won't, because the SEC has one set of rules that applies only to the SEC. It's important to look more deeply on what's actually happening and the real threat that crypto is presenting to the banking industry. 37 years ago, I started my banking degree. I know all about banks and I know how they think, having worked for many of them. Banks are incredibly conservative. But one thing is very true if we look back to 2020, and long-time viewers of the channel, you know this particular chart. I've used it many times. Only 7% of the money supply was physical 3 years ago. What does this actually mean? If people go to the bank and they withdraw, well, only 7% of 100% of depositors coming in and saying, I want my money, 7% will get their funds, because 93% 3 years ago didn't exist. You can be assured that that 7% is not 7% now. It's more likely 2 or 3%. This is why all around the world the banks are just so nervous about crypto. Before, the banks had an undisputed monopoly on financial markets. Now these upstarts, these crypto people have come in and they're taking billions and billions of dollars out of the financial system. It can't be billions of dollars? Yeah, it is. Just in the past 24 hours, Binance volumes were $58.3 billion. And what about OKX? That was $18.9 billion. What about Gate.io? $2.4 billion. What about Bybit? $13.4 billion. I think you're getting the idea here. The banking system is looking at this and saying, oh my goodness, all our bank deposits are fleeing the banking system, which of course has been so unstable. Why is that? Because of the rate increases. Why were the rate increases required by the Fed? To bring supply and demand back into balance by killing little players, as it usually does. Just ponder this for a moment. If the banks saw an increase in flight to safety funding by pushing money into crypto, by taking it out of the banking system, what would happen to the banks? Of course, you got it. They don't have the money. And that's real money that's coming out, going somewhere else, but not inside the banking system. The banks have a thing called capital requirements, and that means this is the money they have to keep on their books. They can't just loan it out. What typically happens, the banks have a credit creation multiplier. It goes pretty much like this. If somebody comes in and deposits $1,000 into a bank account and the reserve requirements are 10%, that means in terms of the credit creation multiplier, they can loan out $10,000 worth of money. You don't believe me? It's true. This is how banking systems actually operate. I can imagine you're saying, Ken, you must be on drugs or something. What do you mean? Do you mean that $1,000 can become $10,000 of credit if the required reserve ratio is just 10%? Yeah, you do the math. It's exactly right. Ken, I'm just not getting it. What about $100 becoming $1,000? Is that possible at a 10% capital reserve requirement ratio? Yes, it is. Because what happens is that the banking system is a closed loop, and that $100 gets transferred after the capital reserve here. So $90 gets loaned out, total deposits. This is the way that the banking system works. It's a legal Ponzi scheme. This is extraordinarily hard for people not in the banking system to actually understand, but you can see it's true. It's an amazing thing that when you consider an initial deposit of $1,000 can turn into $10,000, it's literally like science fiction. How could this be? But it is, because it's a closed loop system. But not anymore. We have literally billions and billions of dollars leaving the financial system. Of course, this is placing an enormous amount of strain on the existing financial system, who literally doesn't have the money. If you'd like to check out the link to the Visual Capitalist, all of the world's money and markets in one visualization, this is where the 7% comes from. It's a staggering concept, but it's real. When you see something like this, what does it mean? It means a lot. If the required capital ratio is 10% and they're saying it needs to be 20%, they can only loan out half as much. Why is that? Because the system is under threat. How does the financial system protect itself? Well, of course, it's all about investor protection. It's not about protecting themselves. It's about protecting you. And there is some truth in that. If the big banks all start collapsing because people do a run on funds, that is not a good thing. But what the public are not told is the internal workings of the banking system. Compounding the problem is that there's still a 25.2% chance that in around 8 days, when the next FOMC meeting occurs, they're going to increase interest rates again by 25 basis points. That will fuel more problems inside the banking system. When you put all of these threads together, it's no wonder the federal agencies are trying to stop the hemorrhaging of money out from the banking system. My hope is that people look a little bit more deeply and understand what the real issues are. The thing to also note, despite being grilled so many times by US government officials, Gary Gensler has never been forthcoming on what a security actually is. There is a pure regulation by enforcement, but you understand there's a lot more to this. It's the banking system that needs protection, and good old Gary is really helping. Back in 1993, I started an internet service provider. Back in 1993, we had things called mail, postal deliveries, and that was a major monopoly along with the gas industry that was owned by governments all around the world. The government soon realized that the internet would bring all of that to a halt. I'm in the postal service, not gas. But the concept is, look back in 1993, we had virtually no one on the internet at all. I was there right at the coalface when the internet was literally born. I was there for many years before I set up an internet service provider. And what actually the news and media and government did to try to dissuade, try to stop people from coming onto the internet. Well, it didn't work very well, did it? But the concept was, they said, oh, no, only criminals are on the internet. Oh, sounds like crypto. Only criminals are on crypto. Only criminals deal with ransomware attacks through Bitcoin, which is an immutable public ledger that is recorded for all time. Pretty dumb criminals. The concept to understand, this is the way that the government deals with everything. First, it tries to crush it. If it doesn't crush public opinion, well, then it tries to adopt it. But you can see it didn't stop the internet. So the question is, what is crypto? It is the next generation, the next evolution of the internet to the internet of money. That is it. That is what crypto actually is. I would suggest that we're around this 1993 level in terms of the internet when comparing it to where crypto is. This is really important to understand. Anybody who was involved with the internet back then did quite well. When you hear public officials talking about protecting other people, then of course that plays a small part of things. Yes, but when it comes down to the real motivations behind trying to stop crypto, it's exactly like what governments did when they tried to stop the internet. A lot of people would say, Ken, of course the internet was just embraced with open arms. I use it every day. If I didn't have the internet, I couldn't do anything, literally. I couldn't do my banking. I couldn't do my email. I couldn't do so many things. I couldn't watch YouTube or Netflix or whatever else is living on the internet. And you only understand the internet's power when you turn it off for 24 hours. But I promise you, back in 1993, the governments all around the world were trying to kill the internet. On a day like today, you can be phased out of the internet market. Oh, which is the crypto market, isn't it? Because it's just the internet of money. Or you can learn from what I learned back all those many, many years ago. The government will do anything to protect established industries. Until it can't, then it will embrace. I'd just like you to consider if we're in crypto around the comparative 1993 basis for the internet, we're really, really early. A lot of developments will occur, and they're going to be not met with praise and congratulations, but with rejection and regulation until the major players can actually get their cut. Once that happens, the full-on crypto adoption will occur. The only decision we have to make now, are we shaken out of the market or are we boursogging? On Twitter, I was asked the question, Ken, are you getting out of Binance? The answer, no. I'm going to lean heavily in. Why is that? Because this market turbulence is what we live for. Of course, what I do and what you do can be very, very different. You should always do what is best for you. A huge thank you to our beloved global family. What incredible comments in the past couple of videos. Well, they're always good, but the past couple were just beautiful. I appreciate you all so very, very much, as does Kate. Current events may make you feel quite desynchronized. If this is the case, the daily positive affirmation, I am dedicated and committed, I win or learn and never blame, is really important. You always want to focus on your learning. Your learning is the fastest way into synchronization. In truth, there's no other way to get there. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.